Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Tuesday night for Trading Wednesday, July 14, 2010. This is our 603rd video, baby, for Wednesday. Traders, what we see going on is that the leader, the Dow Jones Transportation Average, is above the 200 bar moving average. Go Dow Jones! Traders, before we go any further, remember that futures trading is risky and can cause substantial financial loss. If you do not have risk capital or money that can be lost, please do not play this game. For you cowboys out there that do have some risk capital, rock and roll, because the markets are showing us something that we haven't seen in a while. Traders, again, the leader, the Dow Jones Transportation Average, is above the 200-day moving average. Currencies and bonds are at very critical levels right here, and you'll see why in a chart segment in a couple of moments. The corn looks bearish. Red arrow for corn, green arrow for the S&P. Traders, here's what could be going on. We're just getting above the 200 bar moving average and the 50 bar moving average, which they call that the golden cross type thing, and it's supposed to be. I don't really look at it that way. I look at it like this. The 200 bar moving average is widely watched by fund managers around this globe. When markets get above, they go into buy mode. When markets go below, they shift into sell mode. The market is getting above, or is now above, the 200. The world is watching. Same thing in the S&P, same thing in the Nasdaq, same thing in the Russell. You got the same thing going on in the FTSE. You got the DAX. I mean, wow, it's broad-based, and they're starting to go. At the same time, well, you know, we're going to have a little lesson in this video. This lesson will be a little bit about intermarket analysis, and when one market's going to go one way, other markets should go another. And when you do your homework, a bullish market that comes up bullish with its technical analysis, if there's a market that usually trades opposite it, the technical analysis for that homework that night should be bearish, and then it makes sense to you, right? Well, that's the way I like to do my homework. And what you'll see is that currencies like the euro currency and the dollar and the bonds like the 30-year T-bonds have to move in a certain direction if the S&P is going to go up, or should move in a certain direction if S&P is going to go up. So we're going to look at some charts, and I'm going to show you this. We are at one of those proverbial lines in the sand, baby. Draw a line in the sand, and if the market cannot get above it, it will fizzle out and crack. However, if it does get above this area, which it looks like it very well may, well, then what I think is going on here is the world, or the financial system, has absorbed the latest crisis out of Europe a few weeks ago, 6 weeks ago, and is now ready to continue on as it started in March of 2009. That could be what's going on here. The one thing that I like to say about the way we do our trading and our analysis is that we allow the charts to tell us what to do. The analysis tells us if that will be the case. But for now, the analysis is pointing towards that very well may be the case. Maybe, just maybe, the economic system has absorbed the latest crisis, and let's continue on. So with that in mind, traders, let's go to our chart segment. I want to show you a bunch of charts. I think in this segment, I'm just going to rip right through them. I'm not even going to fade in between charts because we got a lot of charts to look at. I'm going to make it quick. So traders, with no further ado, let's go look at some charts. Okay, traders, before we look at the actual charts themselves, I want you to look at these indicators, because these are the indicators on the U.S. indices, and all of them, if you take the Nasdaq, the Russell, the tranny average, the industrial average, the ES, basically they all look the same, and that is that they are in bullish posture at the moment. This is slow stochastics here at the bottom, pointing straight up and nowhere near the overbought area. This is your MACD, moving average, convergence, divergence, and is nowhere near its overbought area. This is your CCI, or commodity channel index, and is nowhere near the overextended area. So you have your indicators of the U.S. indices pointing up right now. I wanted you to see that before we look at the charts. any of the U.S. indices that you pull right now, and if you looked at the DAX and the FTSE, they're all basically in that shape, okay? Indicators you've seen, let's rip right through these charts. Traders, next up, you are looking at the Dow Jones Transportation Average, deemed the leader of U.S. indices. There's a lot going on here. Let's pay attention. First off, what you have is this blue outlined parallel channel with the market testing the highs and the lows constantly and staying within the parallels confines, right? But you have the 200 bar moving average, which we are now above. It is here, and we settled here on Tuesday afternoon. Above the 200 bar, and you know what? I got to give that a round of applause, baby. Go, 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 because I want the stock market to move higher. This is one of the reasons why the world will come in and buy it, the fund managers, so let's hope it continues. All right. So we are above the 200. We are not at the top of this parallel channel, so even if it is going to peter out, there is room to have another bullish day on Wednesday. So you have to be bullish for that reason there. Plus the indicators I showed you. We are above the 200 bar mover, and we're heading towards the 50 bar moving average. And traders, you'll notice on the next few charts, the 50 and the 200 have come together on some of these other indices. In fact, I know that we count on the Dow Jones Transportation Average to be the leader, but you're going to notice in this chart segment here that some of the other indices have actually beat the transportation average up to the top of their parallel channels and above both the 50 and 200 moving day average. So some of the followers are starting to move up a little faster than the leader, meaning one of two things. The leader is going to do leaps and bounds very quickly and move ahead, or we're only going to get 1 or 2 days out of this and back down we'll go. Let's see what the leader does. Now let's continue, traders. Like I said, there's a lot of charts. I'm going to be quick and rip right through these for you. Nasdaq September daily bar, secondary leader above the 200 and now above the 50, and they both come very close to one another with the Nasdaq right here. Go Nasdaq, go, yeah, above the 50 and the 200. And it is not at its major resistance line yet, so it gives us a chance to see another bullish day on Wednesday, and I think that's what's going to happen. You've seen the indicators. Let's take a look, traders. The next one that we have in our list of leaders is the Russell 2000. This is the daily bar chart for September. It has gotten above the 200. It is now sitting right at the 50, and it is not quite at its resistance, but it almost is. This is what I meant by some of the followers have jumped ahead of the transportation average. Transportation average is not near this resistance line yet, but here you are with the Russell, and it's probably about up here right now. So Russell at its resistance line early into this trading session Tuesday evening, above the 200, above the 50. I like what I see. Let's continue to look at other charts here. Traders, S&P, another one that leaped ahead and got to the top resistance line. It is there right now as I do this video. Here's where the S&P is, right at this resistance line. And it is not above the 200, but it is on the 200 bar moving average. It's interesting, but it is not above. This is what I call the line in the sand, the proverbial line in the sand, the do or die area. September E-mini S&P must get above this area, which basically is slightly higher than the highs of the day on Tuesday, somewhere near 97.98. That's 1097, 1098. We need to get above 1103 and go in order to continue our bullish motion and break above the 200. I think we can get above 1103, but we'll find out. That's what stops are for. Let's continue to look at other charts here, traders. Now, we're looking at another one of the world leaders. I've mentioned this from time to time. A lot of the world does not recognize how fast the September FTSE contract is. But the FTSE, the Financial Times Stock Exchange, or London's stock market, is one of the world leaders. It is well above the 50 bar moving average. It is above the 200 bar moving average, and it has cleared above its resistance line, traders. One of the world's leaders has shown us that that's what's probably coming next for the U.S. markets. So now you have the FTSE showing that it is looking to break out and has broken out, so to speak, and I think The Dow Jones tranny and the rest of the U.S. markets will be following that on Wednesday. Now we run into something that puts a little damper on our party here. This is the DAX, the German DAX daily bar chart that is clearly a head and shoulders. We have broken above that head and shoulders and are now heading for what's called the head test. If you have a head and shoulders and the market runs up and fails somewhere between the middle and the top of the head, it basically means the run is over and down you will go. So that's a little bit disturbing, but that will not be tomorrow. Tomorrow is probably an update, even if it's going to test. So the world indices are looking bullish, absolutely, at least for Wednesday. Now let's start to look at some intermarket analysis. You've seen that we've gone up in all the world's indices for the last few days, right? Well, while that was happening, you had September T-bonds moving down and have come and made a bull flag. But September T-bonds have come down to its support, just like you've seen the indices get up to its resistance. On the same day, basically, bonds have come to its support and has breached it a little bit. If bonds break this support and start to go lower, and it's major support, then the indices are likely to break their resistance and run higher. This is where intermarket analysis starts to get interesting. So bonds, if they move lower through the major support, then you'll get indices to run through the major resistance. It's interesting to find bonds at the big support level, just as your indices are at their big resistance level. It is the proverbial line in the sand. What will happen? Traders, it's not just the bonds and the indices. Watch this. This gets really interesting because there are two other markets that are heavily involved in what happens to the U.S. stock market. One of them is the dollar index. Look where it is, at a major support line as of Tuesday, and just now testing OTAMA, or the Omni Trading Academy's proprietary moving average. So if the dollar breaks here, the scenario continues. If the dollar holds here and goes up, everything goes back to what it was a couple of weeks ago, and then your indices go down and your bonds go up. But that hasn't happened yet. Right now, you have the dollar testing an area, and we hope it breaks through so that it allows our stock market to move higher. Then, rounding the turn with intermarket analysis, at the same time that the parallel channel had existed in the dollar index, you have another parallel channel right here in the euro currency. That parallel channel is being tested right now as we speak, just as the bottom of the parallel channel is being tested in dollar index, just as the top of the channels are being tested in the U.S. indices, and the bottom of the channel is being tested in bonds. You see, they all do come together. And you have OTAMA right here near the highs and at the top of the channel in the euro currency, just as you had OTAMA near the lows of the dollar index. So traders, this is what I wanted to show you. It's what the world is all about. It's these charts right here. And I kid you not, these charts work really well. So traders, now it is time to zoom this camera back out and finish this video. So traders, you see those charts? Now that is what I'm talking about. That is intermarket analysis. And you have to find it at least interesting, if not uncanny, that bonds come to the bottom of that parallel channel, just as dollar index hits the bottom of a parallel channel, just as euro currency hits the top of a parallel channel, just as the Dow Jones tranny, the S&P, the Nasdaq, the Russell, they all come to the top or very close to the top of a parallel channel, and all of them hitting the 200 bar at the same time or close to it. That is interesting to say the least. It also means there's a very big possibility that there is a trading shift coming, and these markets are going to now go back up, and in a strong way. I hope, you know me, I always hope that these markets go higher, especially the S&P, but I only trade what we see. Traders, the last video I gave you, we talked about euro currency going down and sugar going down. The sugar did not go down. It actually stopped us out. Or actually, we got out at the end of the day. But euro currency did exactly what the analysis said and probably made 3 times as much for us that day, or the very next day, that the sugar gave on a loss. So my point is the analysis works really well. It won't work every time, but technical analysis works very well. We were able to sell the highs in euro currency and get out 5 points above the low of a big drop based purely on analysis that comes off the charts that I showed you just yesterday. It works really well. All right, traders, so do your homework. Remember, markets are interacting with one another. You got to look at dollars and euros. You got to look at the bonds at all times. And when you do S&P, you got to look at multiple markets to get the right picture of the proper direction for the next coming day. All right, so traders, that's about all I'm going to do for you in this video. I would like for you to come on down to my site. It's www.livewithoscar.com. Jump into the free chat room. I held a couple of classes last week. I plan to hold more classes this week. So come on down so I can teach you to be a better analyst, which in turn should help for you to become a much better trader. All right. Traders, thank you so much for your feedback on the lighting and the sound, because the last video we did for you was the first video in our brand new studio. And hey, heads up for the new studio, because boy, oh boy, it's looking great in here. And I'm enjoying doing my videos from this studio. And I love working out of my office downstairs. What a great place this is. So thank you for your comments. Please share your comments with us once again. We've made some changes. We've brightened the lights a little more out in front thanks to your suggestions. We've toned down the microphones just a little bit. If there's anything else that we can do to make these videos a little better, the lighting and the sound, please come back to us and let us know. And of course, we always appreciate comments about the markets. That's where we'd like this thing to really go. All right, traders, so I'm out of here. Give me a call day or night anytime, 702-629-4755. And always remember, a stop is your best friend, and never trade without him. Traders, keep your emotions out of this thing. I say this to you in every video, and I kid you not, if your stop is in, it helps to pull your emotions out. One of the best things you can do to continue to keep your emotions out of trading is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.